All right, let's get right into it. We're zeroing in on the year 2026, and believe me, it is shaping up to be way more than just another year on the calendar. The entire financial world is signaling a massive, almost seismic shift. We're talking about a historic rotation out of paper money and into hard assets. And we're focused on gold and silver. This is the great reset we're going to break down. You know what's so telling about this is the language they're using. We're not talking about some temporary market swing. They call it a structural break. That means the very foundation, the architecture of our global financial system is being rebuilt, and nations are increasingly tying their power and their stability not to promises on paper, but to physical, tangible gold. So here's the game plan for this explainer. First up, we'll dig into why the current system is showing so many cracks. Then, we'll see why gold is becoming the #1 choice for nations. After that, we'll uncover silver's absolutely explosive industrial story. Then we'll tie them both together with the all-important gold-to-silver ratio. And finally, we'll ask the big question: what does this all mean for the future of money? Okay, let's jump into our first section. We're talking about the cracks that are forming right in the foundation of the fiat currency system. Money backed by nothing but government promise. So what's really putting on the pressure here? Well, the big theme for investors right now is something called the debasement trade. It's actually a really simple but incredibly powerful idea. When governments just keep running massive deficits and piling on mountains of debt, the trust in their currency, think the US dollar, starts to fade. So where does all that money go? It floods into things that can't just be printed out of thin air: scarce, physical assets like gold and silver. And the thing is, this isn't happening in a vacuum. We've got three huge forces all hitting at the same time. First, you have the independence of the US Federal Reserve being questioned at the very highest levels, which creates just massive uncertainty. Second, US debt is getting so big that just paying the interest on it is becoming a risk to the whole system. And third, you have the BRICS Plus nations actively building a global financial system that, well, it doesn't need the dollar. It's a perfect storm.
Lütfen kanalımıza üye olup bildirim zilini açmayı, videolarımı paylaşmayı ve beğenmeyi unutmayınız. Videodaki bilgiler açık kaynaklardan derlenmiştir. Teşekkür ederim.
So, with all this uncertainty swirling around, where are the biggest players in the world turning? That brings us right to our second section: gold. It's making a comeback, not just as some dusty safe haven, but as the ultimate monetary asset for sovereign nations. And just look at this. This really paints the picture. We're not talking about some fringe bloggers here. These are the absolute giants of Wall Street: JP Morgan, Goldman Sachs, Bank of America, UBS. They are all pointing to the exact same thing: a massive repricing of gold, with targets all clustering right around $5,000 an ounce, and some are even aiming higher. Just let that number sink in for a second. $5,000. And this isn't just a wild guess. It's a forecast being driven by massive central bank buying and that exact debasement risk we were just talking about. This number, 5,000, is quickly becoming the new floor for where gold could be headed. Now, for any of you traders and technical analysts out there, this is a huge deal. After smashing through that major resistance level of 45.50, gold has entered what we call price discovery. What does that mean? In simple terms, the old ceilings have just become the new floors. There's no clear historical price stopping it anymore, and the price is now totally free to explore new highs, driven purely by raw demand. So who exactly is buying all this gold? Well, the demand is coming from literally everywhere. You've got central banks, especially in the East, buying physical gold at a historic pace to get away from the dollar. You have huge institutional funds raising their gold allocation, which funnels billions into the market. And of course, you've got everyday people, retail investors, buying gold to protect their savings from the exact systemic risks we've been talking about. But, gold is only half of the story. Let's pivot now to its more volatile sibling, silver. While gold's story is all about money, silver's is a story of an absolutely unprecedented industrial revolution. It is literally becoming the indispensable engine of our technological future. And this slide just lays out the difference perfectly. Gold is, first and foremost, sovereign money. Its value comes from trust and monetary chaos. Now, silver has that monetary quality too, but it also has a second, incredibly important role as a strategic industrial metal. So it's being pushed higher, not just by a financial crisis, but by the biggest technological revolutions of our lifetime. And here is the direct result of that dual demand. For 5 years straight, the world has been using more silver and we can mine. This is not a one-time thing. It's what's called a structural deficit. Demand is fundamentally consistently outstripping supply, and that imbalance is getting worse every single year. So what is eating up all this silver? Well, the drivers are some of the fastest-growing industries on the entire planet. The explosion in AI means we need massive data centers, and they're filled with components that require silver. The green energy transition is basically built on silver. It's absolutely essential for solar panels and electric vehicles. The bottom line is, because of its unique properties, there is literally no substitute for silver in a huge chunk of modern tech. Okay, so we've got gold as the monetary anchor and silver as the industrial powerhouse. How do we connect the two? Well, this brings us to a really critical tool for investors, the gold-to-silver ratio. It simply tells us how many ounces of silver it takes to buy 1 ounce of gold, and it's a fantastic indicator of which metal is undervalued. So at the start of 2025, the ratio was way up at 100 to 1. That meant it took 100 ounces of silver to buy just 1 ounce of gold, a clear signal that silver was historically cheap compared to gold. But then look what happened. By early 2026, that ratio had compressed dramatically, all the way down to just 55 to 1. That shows a massive catch-up rally for silver, as the market finally woke up to its deep undervaluation and its explosive demand story. Silver started outperforming gold by a mile. And this, right here, leads us to the single most important question for anyone watching this space. If that Wall Street consensus is right, and gold is really heading to $5,000 an ounce, and if this ratio keeps compressing back towards its historical average, what does the simple math tell you about the potential price of silver? The numbers? They become truly mind-boggling. So let's pull all these threads together in our final section, because what's happening isn't just about rising prices for a couple of metals. We could be talking about a great repricing of all assets and maybe the dawn of a completely new financial era. The key takeaway for 2026 really is this tale of two powerful converging forces. On one hand, you have a crisis of confidence in paper money that is pushing global wealth into gold as the final trusted asset. And on the other hand, you have a technological revolution that's consuming silver like never before, making it a critical strategic commodity. The result of these two forces colliding is this historic shift out of paper and into hard physical assets. And that leaves us with one last big provocative thought. As central banks around the world pivot to gold and strategic industries corner the market for silver, are we watching something more than just a bull market? Could this be the beginning of the end for the dollar-dominated system and the start of a new era, one where real, tangible assets once again define what money and power truly are? That is the big question for 2026 and for all the years to come.